Today we're going to discuss which fund manager is better, value or growth. Now, recently in the media, there's been a lot of interest in regards to which fund manager performs better, which one is more consistent. Now, today we're going to have an in-depth analysis on what a value manager is and what a growth manager is and which one is better. Now, to fully understand that, we need to understand what a value manager does. A value manager will focus primarily on the fundamentals of a company. For example, dividends and company earnings. They will then use these fundamentals to create a fair value share price. Now, a value manager's fundamental theory is based on the markets run on emotion. So they have a share price, and the share price goes up and the share price goes down. But what they'll do is they'll trade around their fair value. For example, they will create the fair value of a share price, let's say X, and as the market moves, they will trade this share. So when the share price is low, they will buy the share. When it becomes overvalued, they will sell the share. And they will continue to do this while they see value in the company. This doesn't mean that they will buy a share if it's undervalued but it's got no growth potential, but it gives them something to work with. Value managers typically perform better in volatile and choppy conditions, as you can see, and they typically don't perform as well in bull markets, like we've seen in the last 4 years. Now, a growth manager will still use the key fundamentals, but they will focus on earnings potential. They want to see companies that have a high earnings growth potential. So what they'll do is they will buy a company, but they may not sell when they think it's overpriced, as they think it's got a higher earnings potential. Now, these companies will perform extremely well in bull markets like we've had. So I guess the discussion leads us to which one is better, a value manager or a growth. Our opinion, and a lot of experts, is that they complement each other, and a perfect portfolio would have a growth and a value manager in there. This will optimise your returns and also reduce the risk of your portfolio.